Hello everyone and welcome to today's morning report analysis videos on Thursday the 23rd of August with me, Rich Perry, market analyst at Hantec Markets. It's interesting, we've got a slight recovery on the dollar today after 6 days where the dollar has been struggling. We've started to see a bit of a turnaround. Is this a sustainable move? That is the question. The move has come on the back of, you had the Fed minutes last night, and they were fairly strong still, fairly hawkish, talking about the strength of the economy, raising rates, likely to come very soon, i.e. September. But also sort of highlighted the concerns that the Fed have on the trade dispute, and basically the trade dispute seems to be the one main thing that the Fed think could derail the strength of the economy. And this comes as the US and China both implement tariffs of or more tariffs of $16 billion on each other today, and they started to see this turnaround on the dollar. You can see this through the forex majors today. The dollar is stronger across the board, and also on gold. Look at gold starting to fall back. Now that's come as the rebound on the dollar index has started to come through. Look at the Chinese yuan as well. It's weaker against the dollar, but look at yields. Still not really going anywhere. Flattening, if anything, on the yield curve. Continues to flatten. 21 basis points. 2-10 spread. Wow, that is getting very close now to going flat. And this, as I said, comes as we've got this dollar that continues to strengthen. So trade dispute back in focus. Also, the Fed the Fed minutes bringing monetary policy back in focus as well. Hence the dollar strength. So we've seen that. This is another interesting one here. The Aussie dollar is the relative underperformer today, 0.8% lower against the US dollar, quite significantly weaker than the other majors, and that's coming amid heightened political risk on Malcolm Turnbull, the Prime Minister, calls for him to resign, and it's certainly weighing on the Aussie today. In terms of equity markets, bit neutral actually, bit flat, pretty much mixed. We had Wall Street, which was slightly ticked a bit lower yesterday on the S&P 500 and Dow. Futures basically flat today. But European markets are very cautious, as the markets don't really know how to take yet this sort of this issue that Trump is facing from the Cohen trial and the Paul Manafort trial, but mostly the Cohen revelations, and that he paid off 2 women through his campaign. So the markets don't really know yet how to take this, and they've sort of stabilised a bit and consolidated for having been quite strongly rebounding. You've started to see that rebound losing impetus, and we could start to see that turning lower. But today we've got the manufacturing and services flash PMIs for Eurozone and US, and that's sort of mainly the focus today. Basically in line on the Eurozone data. Slight tick lower, or slightly lower than expected on the manufacturing data, again falling away, basically in line with services and the composite. So we then look towards this afternoon's US flash PMIs, which come out at 245, slightly ticking lower to 55 on the manufacturing, and on the services, sort of again a slight tick lower, but nothing too decisive. Slightly expectation of a slight downward move on the Eurozone consumer confidence as well, and new home sales as well, slightly higher than last month is the expectation. So a little bit of US data today, but nothing too drastic to move the markets, I don't think, necessarily. Now my chart today is Euro Aussie. I mean, I've talked about how the Aussie has underperformed today, and that is an acceleration of what we've seen in the last few days, really, whereby the euro has been performing much better. Not necessarily today, but the Aussie has been hit really quite hard in the last day or so, and that is reflected through these strong bull candles. And look at that, we're now, I mean, I was looking at this chart yesterday on the breakout of this downtrend, thinking it's just going to be sort of rising towards the test of this resistance at 58.90, but it looks like 58.90 is going to get really tested, and a breakout above that would reopen these highs again, 61.40 to 61.90. So look at the momentum indicators, MACD lines crossing higher, stochastics accelerating higher, the RSI above 60, that's the highest it's been since early July. In fact, it's sort of on the brink of moving above the highest it's been since March. So if it moves into the high 60s, you would suggest that that's going to be breaking out above that 58.90 resistance. You'd be looking to buy into weakness on that Aussie now. So this is the acceleration higher in the last few days. Any unwinding move seems to be seen as a chance to buy. You've got the initial support band of yesterday's sort of high and mid-afternoon low, 58 big figure down to 57.60. Nice band of support there to use as a chance to buy if you get any sort of corrective move or initial sort of unwinding move today. But certainly a test of that 58.90 level is set on the Euro Aussie. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later.